Good morning, traders. Welcome to the Pirate Traders live stream. My name is Charles. I run a community called Pirate Traders. You're here. Let's hang out. Let's talk about the market. Let's see what happens. So, we are focused on the market's two-way auction process, and this morning, that auction has created a gap to the upside. So the first order of business for the market is to try to fill the gap, to try to get to yesterday's low at, yesterday's high at 52.40. Okay. This is a relatively large gap. Often large gaps like this don't fill right away. So it is worth noting we may get something more like a half gap fill, and then the market turns around and starts heading higher. Okay. If the market cannot fill the gap, if it partially fills, finds support, and then turns around and starts heading higher, that is the most bullish scenario. It increases the odds the market is going to continue higher for the rest of the day. And if we fill the gap, if we get to yesterday's high and find support in there and turn around and head higher, that is also a gap and go, the most bullish scenario. Okay. Now it is worth noting, even though it was very, very small, we did have a spike up at the end of the day, a whole 3 TPO spike at the end of the day, but we closed inside the spike. So this is a spike up followed by a trend up. Okay. Followed by a gap up. That is the most bullish setup that you can get. The last time we got one of those was in here. Okay. So you can get continuation to the upside. If you get a spike up at the end of the day, a gap up the next day, and then you get a gap and go, that could last all day long. Now, it doesn't mean it will, but it could. So all in all, as the market opens this morning, I am feeling relatively bullish intraday today. However, I need to give a little context to that bullishness. So I'm going to zoom out and look at the daily chart. I've drawn this trend line, okay, coming from the previous highs up here. We are dancing right on that trend line again and again and again without any truly substantial pullback with price. So that doesn't mean the market can't keep going higher. It just means the market is getting itself very overextended. We are also now working our way up to previous balance area highs. Okay. So there was a balance area in here back in March, and the balance area highs were just above it now. There was a balance area in here in April, and we're working our way up towards those balance area highs. So these are areas where in the past, the market has run out of steam and had pullbacks again and again and again. It would not be unreasonable for the market to get one little push to the upside and then come crashing back down. So for the moment, as an intraday trader, I'm focused on momentum. Do we get a gap and go? If we do, I'm not fighting that momentum. I'm assuming they could go straight to the moon. But I am doing it in context, recognizing that the market is getting itself very overextended and does need a pullback at some point. Okay. So because the market reversed this morning at 52.51, I'm going to call that a weak reference because it reversed exactly at a previous volume point of control. But as of now, this is a gap and go. Finding support inside the gap and passing back through the opening price makes it a gap and go. That increases the odds we're heading up to test the overnight high at 52.61. And we will monitor for continuation higher from there. If it gets above the overnight high, does it bring in new buyers? Okay. If it does, it can just keep going. If it looks above and fails, then we're back to looking for a gap fill. But for now, it's bullish. All right, so I'm starting a poll. I'd love to know what you guys think. You'll see it there in the chat. Do you think we're going to fill the gap today? Remember, gaps this large often don't fill right away. So far, the market has given us a gap and go. That is a sign of momentum. So do you think the momentum is going to continue all day long, or do you think we're coming back to fill that gap at some point? Good morning to Will, MW, John in the house. MW says, glad the algo showed it near the top. I assume you mean my video. Yeah, we're happy to have you. Thank you, YouTube algorithm. Mr. Ree is here. Kevin, good morning to you. Laura in the house. Jack W says, happy Friday. Willie T, good morning to you. Cool Bean says, today is the day for the normies. Hello, normies. Yes, sir. All are welcome today. Good morning, Scalping Strategy. Tom is here. Jay says he's so sad it's Friday. The casino will be closed at the end of the day. That's all right. It'll be back open on Monday. Debbie B in the house. Shush. Good morning. He says, it's Friday. Let's have some fun. I agree. Trading should be fun. I know sometimes, especially if you do it every day, it doesn't feel that way. It feels like just any other job, just sludging and drudging through the monotony of the day-to-day. But honestly, this is the coolest job there is. It is fun. And we got to remind ourselves sometimes. We're making money for pushing buttons. 777 Athletic in the house. Welcome back. Good to see you. Tony McBride is here. Tim G. Knapp, good morning. He says we got consumer sentiment at 10. We'll look out for some volatility there. Rich, hello to you. 77 says, have I tried the Trading View TPOs? I have not yet. I know they made them, but I haven't tried it. Sebastian, good morning to you. DNK says the NQ's above the overnight high. Oh boy, let's take a look at the Q. What's it going to do? Okay, so NQ has just revisited one of those large nodes that we track, which is always a potential target for the market to make it to those nodes, but we never know what will happen when it gets there. So I suspect there's going to be a little sideways chop here at the overnight high for the NQ. They do have a gap. They do have a gap and go. So as long as they stay above the opening price, it is bullish. As long as they stay above, we'll call it 18,276. That is bullish for continuation to the upside. I do suspect we're going to have to do a little chopping here first, though. If they pull back through the opening price, well, then they're looking for that gap fill. So that would no longer be bullish. But any buying up in here is bullish for continuation. Speaking of bullish, ES still has not quite tested that overnight high. And again, that will tell us what to expect moving forward. New buying, there it is. So new buying above the overnight high is bullish for continuation. A look above that fails and pulls back through the opening price, looking to try to fill the gap. Let's see what happens. So we should have at least one more pop of short covering. That should happen here at the overnight high, as any sellers that were shorting here would have their stops just above. We took out 280 stops, but I don't know if that's enough. All right, any final takers on the gap fill? We're at the overnight high. So if we're going to look above and fail and pull back down to fill the gap, it would be now. What do you guys think? Are we going to get that gap fill or not? All right, the results are in. Only 35 people voted? Y'all, come on. 65% are saying the gap is going to fill. 34% are saying it's not. That's pretty close to even. But, of course, we always go against the poll. So if 65% of us think it's going to fill, that gap ain't filling today. We're going to get ourselves a gap and go. Also, we've got 102 people hanging out. Welcome, welcome. We're happy to have you. But only 32 likes. So basically, most of you hate the pirate. I get it. I've got a mirror. I can see what I'm putting out there in the world. Grizzly Bull, good morning to you. Jay says, never seen a gap I did want to have filled. I think, did you mean didn't want to have filled? Or do you always want a gap and go? Pavel in the house, good morning to you. Okay, so we're dancing right on the overnight high. If the buyers want to keep this momentum going to the upside, if they want to keep the market going higher today, they've got to hold above the opening price. We'll call it 52.56, okay? They got to stay above there. If they pull back through the opening price, they will start squeezing all the buyers from this morning and from the overnight, and the market will start to work its way back down to fill the gap. So the buyers are still in charge. The momentum is still to the upside, but they got to keep it going if they want to keep it going. That's the thing about momentum. For the momentum to keep going, it has to keep going. They got to keep buying. More shorts got to cover. More buyers got to step in. So I'm going to click over here and I'm going to look at the ticks and I'm going to see what's happening with the underlying shares. Are they buying up the shares or not? So far, we opened with a gap up, and the ticks were able to work their way back down to the 0 line while price worked its way higher. That is bullish to see. Can they now hold the 0 line on the ticks? Rich says, can you give us a brief description of your Bookmap chart and how to read Bookmap? Well, the chart on the left is market profile. The chart on the right is Bookmap. And I can give you a brief description of how I read them both. It's an excellent question. So the chart on the left, the market profile chart, that is basically the same thing as like a candlestick chart. It's just showing me price action. It's showing me where the market goes. However, it shows me in 3 dimensions. It lets me not just see where did price go, what's the high and the low of the candle, and how much volume traded during that period of time, which is all a candlestick shows you. It shows me where it spent the most time, which is where you see more of these letters grouped together. We call those TPOs. And it shows me where it brought in more volume. That's where you see the little volume profile levels. Okay? So being able to see where price goes, how much volume it brings in there, and how much time it spends gives me an indication of the momentum to the upside. So for example, right now, where is the market bringing in the most volume so far today since the market opened? Well, very little volume below the opening price, mostly all white candles down there. But we got lots of pink candles above the opening price and even some red ones. So that means a majority of the volume is being brought in right now at the overnight high. That is a sign of new buyers stepping in at the overnight high. Because if all we had to do was squeeze the sellers from the overnight, if these buyers were just shorts covering, it would look like this. It would poke up there, it'd be very thin volume, and then it would come right back down. But instead it poked up. It has, since it got up here, spent all the time up here, and it has brought in all the volume up here. That's a sign they have the momentum to keep it going. Okay, that's bullish to see. So that is what I use the TPOs for. Time, price, and volume. The Bookmap I use to understand the liquidity in the market and how that liquidity changes. So this little section of the Bookmap over here on the right, that is what is showing us the current order book. So the darker the colors at a particular level, the more liquidity. Liquidity means orders that are sitting in the order book waiting to fill. So any that you see above price, those are shorts, limit sells that have been layered in. Any that you see below price, those are limit longs that have been layered in. And so we can see where is the liquidity. Are there more orders layered above price or below it? Using the heat map feature, so if I zoom out here, I can see how that liquidity has changed through time. So I can understand, based on what moves the market has been doing, how the liquidity has been changing. This shows us where the market starts, where price going to a new location starts to change the market's mind. So right here, you can see there was a lot of liquidity earlier this morning when the market opened up around, 52.57 to 52.60. There were a lot of shorts sitting up there, right? But when the market got up there, poked through, and then started to spend time and bring in volume up there, what happened? They flipped the order book. They went from having liquidity as shorts above price, which is what this is here, to now having liquidity below price, which is support, which is longs. So again, volume up here is a sign of momentum. Flipping the liquidity also a sign of momentum. We're convincing new people to go long. I can also see that we have about an equal amount, maybe even a little bit more, sellers above price right now. So that tells me we're not going to go straight up like a rocket ship. We're going to have to grind for a while. We're going to push up and fill some shorts. We're going to pull down and fill some longs, shorts, longs, shorts, longs. We're going to have to spend some time fighting and playing tug of war here at the overnight high. I talk about all of this and more in much more detail in my workshop, Mastery of Markets and Mind. You'll see a link in the description. I'm teaching it next week. It starts on Monday. I only do one every couple of months. So it's now or probably wait till the end of summer before there'll be another chance. If you want to sign up, head to marketsandmind.com or click the link. Malcolm says, just thinking about the 80% probability that only one overnight high or overnight low is taken out, this market appears to signal bullish. It's a valid thought, but with the gap, I would say if there was ever a chance this could be a 20% day, it would be today for sure, because the overnight low is right at that gap fill. So this could be one of those days where we test both ends. How will we know? If they pull back down through that opening price. If they're going to keep the momentum going, they got to stay above 56. Just imagine if you were a buyer right now. If at this very moment you got bullish and went long the market here at the overnight high, would you still want to be long if we pulled below the opening price? Would you still want to be long if we pulled below 51? How about if we got below 44? Probably not, right? So all these buyers are going to get squeezed if we can't bring in new buyers. And keep the momentum going. Let's pop over and see what's happening with the Q. Okay, it's bullish. They're bringing in new buyers above that overnight high. John George says, although I hate you, I did give a thumbs up anyway. Well, isn't that nice of you? You did your kind deed for the day. Khalil, good morning to you. RK says, new viewers take note, only stream not affiliated with a prop firm. Why do you think that is? I mean, I'll answer the question. Because I don't think they're a legitimate business model. I think they work against the best interest of unexperienced traders. Now, I have no problem if you are a profitable trader who just wants to size up and you want to use a prop firm. I'm all for that. But if you're trying to learn how to be profitable and you're using a prop firm, you're probably making things harder on yourself. And I know the chat's going to hate me for saying that, but that's just how I feel. John George. Okay, due to popular opinion, I now don't hate Charles. Boy, that was a quick flip. Okay, so I'm bullish, but there's two things that have me feeling cautious right now. Can the chat tell me what are the two things I'm not loving at this moment if I'm a bull? I got 10 things I like, 2 things I don't like. Can anyone tell me what it is? Malcolm, tempo, correct. Tempo is super slow. We went from the opening price to the overnight high in like a minute and a half, and now we've gone nowhere. And what do we know about FOMO buying? They got to have tempo. They got to get people feeling like they have to get long. So the slower it is up here and the longer we spend sitting in this exact place at the overnight high, the more likely these buyers will get squeezed because it's weak hands and they're getting weaker and weaker with every passing moment. What else? Tony got it. Tony nailed it. Taper and tempo. The other thing is the taper with volume. If the market wants to keep going higher, we do not want less and less participants the higher it goes. We want it to push up, bring in participants, make a big fat node of volume, then pull down again, right? Find support, push up, big fat thing of participants, pull down, push up, right? We want to be building volume higher and higher and higher and higher as new participants chase price. Instead, we're getting a taper in volume, which means there's fewer and fewer participants the higher it goes. So when you combine the slow tempo with the taper in volume, you know you're running out of momentum here. Now, that doesn't mean it's over. We still got a gap and go. We're still at the overnight high. Everything is still bullish. We got dozens of signals that are bullish. But these bulls need to hit the gas pedal right here, right now. Oops. Plus news in 3 minutes. Or in 1 minute now. That is another important thing. No one likes to be right at a pivotal level like the overnight high, where the market is either going to break higher and continue higher for the rest of the day, or it's going to fail and pull back down right when news hits, right when Bookmap goes dark and there's no liquidity, excuse me, and the market can go anywhere because it just makes, there it is, Bookmap is dark. So now it's in God's hands. Who knows what happens? Because they could push it anywhere. Here we go. So the B period reversing right at the opening price is a second week low. So we got a gap, a week low times 2. But we don't really care because we're waiting for the liquidity to come back. This is just the market reacting to the news. So let's see if we can bring in some support and get back above that overnight high. In which case we won't worry about the week low. All right, there it goes. So very importantly, I'm going to keep the green banner up. Okay? Because as I mentioned this morning, the market finding support anywhere above yesterday's high is bullish, bigger picture for continuation to the upside. However, the look above and fail of the overnight high, passing back through the opening price, does increase the odds. They're going to try to fill the gap. So, over the next 30 minutes, over the next hour, it might be bearish for a pullback, but bigger picture, it is still bullish. That weak low just became a poor low. Turning it into a poor low increases the odds that this is a push away from the poor low that will find resistance and then come back through to repair it. That is less bullish to see. GeoCap says, so if it goes through the high volume node, buyers stop out and they won't buy again. They won't buy again there, or they may sell when it comes back up and becomes resistance. Yes. So what he's talking about is when we had this large node up here, and it was acting as support, and market was just bouncing and bouncing and bouncing for like 20 minutes on that exact level. Those were buyers stepping in and holding support. Once it broke, which it did in like a fraction of a second, once it broke, it stopped all those buyers out. I imagine we can even see it on Bookmap. There'll be a large volume dot there. Not that big. Man, they got one buyer for 200 contracts. Sucks to be you, bro. So yeah, they take out that buyer. Look, here's another one. 1,600 contracts. Took him out too. So do those people want to immediately re-enter a long trade? Absolutely not. So they won't be buyers. The second we get back up there again, they may even become sellers. Previous support might become resistance. And the market pushes up into it and then gets smacked down. But to convince these buyers that just got squeezed at the overnight high to get back in again, the market either has to go on discount, giving them a cheaper price to enter, or it has to get back above there and hold and start to create that FOMO again. So I think we're in for a little bit of chop here inside the overnight range. Tony says, awful consumer sentiment. Yeah, I can understand that. Shit's expensive. Jack says, why poor low? I see a weak low. So I measure a poor low as when at either the low of the day or the high of the day, two TPOs are right up against each other. So the B period low and the A period low being right up against each other makes it a poor low. It was a weak low before. And the way we think about a weak low is that it is just like a magnet tugging on price. Not a very strong magnet, not a big deal. A weak low doesn't mean that much. But it's just there. We're aware of it. It's a magnet. But a poor low is a much stronger thing. And it first pushes the market the opposite direction, and then it comes back to take it out. So we see this as a push away from the poor low, and the assumption is they're going to come back through. Of course, I go over this in detail in my workshop, Mastery of Markets in Mind. MarketsandMind.com starts Monday. All sessions are recorded. If you can't watch it live, you can always watch afterward for up to a year. Willie T says, I can still buy farm fresh eggs for $1 a carton. I buy 20 cartons at a time. Well, let's not get into why you're buying 20 cartons of eggs at a time, but $1? Boy, that's a good deal. I feel like I'm paying like $6 or something for 12 eggs in New York. Willie says, I usually eat 4 to 6 eggs a day. Willie, do you have any space? Do you have any land? Maybe you just get some chickens. All right. Well, I would describe this as day 3, or actually probably day 4 of super mechanical markets. The fact that we are dancing right on this poor low again and again and again, and that it is all bots just ranging the market in this tight range tells us that this market is still being controlled by computers. What do we do with that information, Charles? We just expect a lot of chop and a lot of reversals at exact references. So those that are in the brigade heard me talk about this yesterday. If we go back and we look at the last few days, which have been these bot-driven mechanical markets, what do we see happening over and over again? D reverses at C high. D low reverses at B high. E high reverses at C high. F high reverses at D high. I high reverses at H high. You'll just start to see these things again and again and again. M low reverses at B low. Next day. D high reverses at C high. D low reverses at C low. E low reverses at D low. E high reverses at, oh, no, not quite. F low reverses at E low. F high reverses at B high. I low reverses at G low. J low reverses at H high. K low reverses at J low. L high reverses at K high, which reversed at the J high. M low reverses at I high. All right. Next day, yesterday, E high reverses at D high. F low reverses at E low. I high reverses at H high. J high reverses at I high. J low reverses at F high. L reverses at K. M reverses at L. So just from what we're seeing so far this morning, the way we are dancing on this poor low, I suspect we're going to get another day of the same thing. Now, that doesn't mean we can't fill the gap. Nothing like that. It just means we're going to keep getting reversals at exact levels again and again all day. Okay, there is the repair of the poor low. So now that magnet is gone. We had a magnet at the opening price. They repaired that. We had a magnet at the low. They repaired that. So the only magnet left is the gap fill. If they can get back above the overnight high, the gap fill won't matter. But for now, that is the target for the market, to try to fill the gap. In a very choppy, reverse at exact references kind of way. The next references that stand out at me for reversal, the opening price or the halfback. Why, Charles? Why does the market reverse at exact levels over and over again when computers are the ones making the moves? Well, because computers, unlike humans, do things in a very exact way. When it is humans that are causing the market to reverse, it's emotional. Everybody kind of has a different opinion of the exact level. Some people are buying support here. Some people are buying support there, so on and so forth. But when you get the market reversing at an exact level to a tick, that's machines, my friend. marketsandmind.com. Tony McBride says, where support, question mark. So again, it's tricky, right? If it's going to be choppy, it's tricky to know exact levels. But to me, the two that stand out as the most likely to reverse the market, on a move down would be the time point of control from the overnight market. There was a large volume node right there. And, that's a level where the market spent a lot of time. So maybe that will be support. We'll call that 52.44. If not, they will fill the gap, and I would look for support at the base of the spike up, which is literally the overnight low. So 52.39. One of those two is potential support for a reversal. Charles, if you think it's going to fill the gap, shouldn't you be bearish? No, sir. Because it's what happens on the gap fill that tells us if we're really going to get a larger pullback. They could very easily fill that gap and then turn right back around. Oops. Abu says, what about the NQ? Let's take a look. Oh, man, they're back to fill the gap. They almost did. Yeah, so NQ obviously trying to fill the gap. They are about 2 points away. So the odds of filling the gap now are extremely high. I would look for support at 18,233 for a bounce. If they can get back above the previous day's range, we'll see if the buyers can step in. If not, I would look to test the overnight low at 18,212. Boom. So there's your gap fill on the Q. Rob says, what times are the workshop? Great question, Rob. So the workshop is for the next 2 weeks. It is from 11 a.m. We'll say from 11 a.m. to 3 p.m. The way I do it is there's a lecture at the beginning, like a PowerPoint presentation that I go through that usually lasts an hour or two. Once the lecture is done, we just hang out and I point out trades and stuff that I'm seeing on the charts. If it's boring and there's nothing happening in the market, we'll cut it off early. But if not, it'll go from 11 a.m. to 3 p.m. every day. If you can't be there live, if you have a day job or whatever, it's totally fine. You can watch the videos afterward. They'll be posted and available. And the only lesson you have to watch in order is you have to watch the first lesson first, because that's where I explain all the software and how to read it and stuff like that. But after that, each lesson is built out to be completely self-contained. So you can miss one and watch it later, and it won't affect your ability to understand the rest of the lessons. Truman says, do you ever think bots may be training us to look for exact level reversals and then whoosh, they change it up? Truman, not only do I think it, it's a fact, Jack. That is what they do. So there is a thing that happens where every few days or every few weeks, sort of the behaviors, the regular behaviors of the market change. So this that we're seeing right now, where we're getting all these exact reversals, it's actually been a while since we saw it. The last we saw this type of behavior that we've had in here was back up in here. That was the last time we had this type of behavior. But once we started this large pullback on the daily time frame, that went away. We were no longer getting these exact pot reversals anymore. The market was behaving totally different in here and totally different. And now it's back and they're doing it again. So the way I think about things is if I see a pattern, I try to take advantage of that pattern. Jim Dalton says the expression that he uses is traders will do what works until it doesn't. So you'll notice the market get into a certain pattern where it's doing a certain thing. It was doing this that it's been doing now, all in here and all in here and all in here. And then it just disappeared for a long time. Now it's back. How long will it last? I have no idea. But I just want to recognize it when it's happening. And I want to keep that tool in my tool belt until it stops working. And then I change again and I start seeing the markets differently. The same thing with volatility. The market will have periods of time where it is very tight ranges. And then it will have periods of time where it is very large ranges over and over again. And they get you used to these very large ranges. And then all of a sudden they start with the tight ranges again. And then they go back to large ones. And then they hit you with some tight ones and then large ones. And when I say they, I need to clarify. I'm not talking about like there's some conspiracy theory, like there's some room with men sitting around a boardroom making decisions about what the market does. It is just the market being the market. The way a market works, it must constantly change in order to have business happen. So it's just the nature of it. Always has been, always will be. The thing that is different nowadays is that these changes happen very rapidly because machine learning. But there's always been constant change in markets and market behaviors. That's just the way it goes. As soon as traders start to exploit it, somebody exploits them. And then the behavior changes. Cool Beat says, rule number 2, don't talk about the cabal. Or sorry, rule number 1, don't talk about the cabal. Rule number 2, see rule number 1. Yeah, there's no cabal. Believe me, the wealthiest and most powerful humans on planet Earth also lose money in the markets. Everyone loses money sooner or later. Cool beans. Okay. So what we're getting now is long liquidation. All those buyers who've been hoping the momentum would keep going are starting to give up on their trades. And so they're starting to get squeezed. Now, long liquidation can feel very bearish. It can feel like, oh my God, the market is falling really fast, really far. Oh my God, oh my God. But it's actually the opposite effect. A liquidation break will strengthen the market because it squeezes out weak hand buyers who were buying at the highs, and it gives stronger hand buyers that waited for the market to be on discount. They waited for the gap fill. It gives them a chance to get long. So seeing that the market is filling the gap via liquidation increases the odds in my mind that we will likely get a look below and fail of the overnight range and then come right back up. It's beginning to look like we're going to chop around in that overnight range today. How will I know that that thesis is wrong? If we get new selling below the overnight low. But if we get taper like we did up here, it just pokes below and comes right back up, probably we're chopping inside the range. Let's see what happens. Single prints inside a gap. Shit's weak. Rob Farley says, do you need to have Bookmap? I would say if I tried to trade without Bookmap now, I would feel blind just because I've gotten used to it. But I traded for years without it, so you don't need anything. It's just about what your brain is used to, right? This business is a pattern recognition business. So you pick your tools you want to use, and you stare at those tools all day, every day, and you get better and better at using them. Same thing as any other tool. If you were to play a guitar every day, day in and day out, and you were to use a pick to play that guitar, and then suddenly somebody took away your pick, you wouldn't be as good a guitar player. You know what I mean? Sure, you can play a guitar without a pick. It's doable. But it'd be better if you learned to play without a pick. Because once you take away that thing you're used to, it gets harder. James says, yesterday you talked about a lot of weakness being left behind. What level of selling today would make you think we might be going back to fill the weakness? That is a great question. The spike up followed by the gap up makes me think we're probably not going back for that much of the weakness today. But any selling below the overnight low tells me we're starting the process. So remember what I started the day today talking about. You know, we've been pushing and pushing up against this resistance line on the daily time frame. And so far it's fine. Like we poke into it and we still bring in new buyers, and we poke into it and we still bring in new buyers, and we poke into it and we keep poking into it. So as long as we can keep bringing in those new buyers at the highs, we can just keep going. But sooner or later, the market has got to pull back because we just have weakness everywhere in here in need of repair. Right? So we're always looking for what is the first sign that we're pulling back to start that weakness. So if today we start to spend a substantial amount of time and bring in a substantial amount of volume below the overnight low, that will begin the process of that pullback. But I don't think we'll get a giant pullback today because we've had so much momentum to the long side. The higher probability in my mind is that there's buyers waiting. There's strong hands waiting in here. Jay says, Fed heads speaking now too. Man, they just don't stop. It does feel like it's every day. Did you guys see that Druckenmiller interview where he was like, I wish they'd just stop talking altogether. He's like, I wish they'd just do their job, make decisions and not tell anyone about it. Cog says, I think speak is the new Fed tool. That's 100% right. Okay, so this is a tricky thing. When you're trying to teach people how to look at markets, sometimes it can't be simple. So I'm in a tricky moment here in terms of putting banners up on the bottom of the screen. The C period breaking the B period low is the beginning of one time framing to the downside, which is a red banner event. It increases the odds we will get resistance and continue lower. However, bigger picture, I don't really think they're going to go that much lower. I think they're just going to dip below the overnight low and come right back up. So I'm just going to switch to the neutral banner so as to not send any mixed signals here, because I'm not that bearish, even though we are one time framing lower. Bryce says, you gotta love when the non-voting Fed members like Logan come on after Jay Powell, usually when the market's at all-time highs, and just totally contradict everything he says. Oh, if you want to have fun with it, if you want to have some real fun with the Fed speak, if you just look at Financial Juice while the Fed speakers are talking. So what they do with Financial Juice is they just kind of pop up any like important comments, like just a single statement real quick. And you will notice, you know, after the person's been talking for like an hour, you can go through and you'll see there'll be dozens of statements here. There will be contradicting statements from one person. It'll be like, we don't think inflation is a problem. And then it'll be like, we may need to increase interest rates because of inflation. It's like they will literally contradict themselves in the same statement. It is hilarious. Nap says that overnight POC did its job for now. For now, it's holding. But when you get a gap that's this large and you get that close to filling it, you will probably fill that gap. So I'm looking for resistance either here at the base of the single prints down, 52.50, or the half back, 52.53, to come back for that gap. Another thing that's worth noting if you really want to get into the nitty gritty of things, the taper at the low. Just look at the taper in this 30-minute profile right here. They literally forcibly reversed the market at that exact level. And we could see that was icebergs doing that business down there. So that's computers. Increasing the odds they'll come back for it. All right, so they backfilled those single prints that needed to be backfilled from the B period. Do they now reverse the C period at the A period low? So there you have it, folks. The reversal of the C period high exactly at the A period low. The bots are still in control. I suspect this sort of behavior will continue for the rest of the day. Does that mean every TPO will reverse exactly at another TPO? No, no, no. It doesn't always do it every time. That would be too easy. But it is something to look out for if you're looking for low risk opportunities to jump into trades. We got 131 people hanging out, only 58 likes. Smash that like button. If you want the pirate to keep hanging out, you got to show him some love. All right, 69 likes, no more. Oh no! Oh no! Thank you guys. Appreciate you. Cool beans. Thank you for the $1, brother. Appreciate you. I bless your harvest of peppers. May they grow large and tasty. Cog says, if you're on the fence about taking Charles's course, it's well worth it. It'll change the way you think, and it'll pay for itself quickly. And that's what I always say. You know what I mean? It's like the course costs $400. Okay? $400 is what? 8 points in the ES? Just from the base of the single prints, where we knew we had resistance. We knew we were likely to get a bot reversal because we've had them the last few days. I talked about that earlier this morning. To the gap fill, which is the target, getting down to 52.40. You got a 10-point move. You've just in a single day, with a single contract on the ES, paid for the course twice over. You know what I mean? So there's got to be some value in it. If you can get even one single concept that in one trade you can pay for the whole course, that would make it worthwhile. But I believe you will get a lot more than that. I will believe it will completely shift the way you think about being a professional trader. It will go way more in depth than just explaining bot reversals and base of single prints and gap fills, which is just one simple concept. It will help you to understand how to conduct yourself as a trader in a constantly changing market. So I believe the value more than pays for itself. Tenfold, in fact. But of course, you know, it feels risky. I get it. It feels uncertain. Am I really going to learn something that will make me a better trader? I don't know, because I haven't taken the course yet. I don't know. So I get that. Okay, so now we are back down below the overnight low. This is bearish to see. The market is one time framing lower. We filled the gap, and now we're below that overnight low. So if we get what we call a look below and fail, basically the exact same thing that happened at the high, if the market turns around now and heads back up into the overnight range, we will look for a choppy sideways day where the market just grinds around inside the day's range. Okay? If we get new selling down here, that will be bearish to start repairing weak references. The way we think about weak references right now, it looks like a look below and fail. The way we think about weak references is that they are magnets tugging on price. So each one of these is a magnet pulling on price. It doesn't have to backfill them all. Each weak reference that it repairs increases the odds that that might be all it needs to reverse. So the first one may not be enough, but the second one might. And if the second one's not enough, the third one definitely might. And if the third one's not enough, the fourth almost certainly will be. And if all four of these weak references being repaired isn't enough, the base of those single prints will likely hold. Okay? So that is why I say I am not bearish for a huge pullback here today. As a matter of fact, I think chopping sideways inside the overnight range is the most likely scenario. But let's wait and see, do we get selling down here below the overnight low? If we do, I'll put that red banner up and we'll start looking to repair those weak references. Truman says, talking about the workshop, it's like a college seminar in 2 weeks. Don't be afraid. It is worth it. And it is recorded. Yeah, you can go back and watch it as much as you want. Once again, marketsandmind.com. It's going on for the next 2 weeks, and then it won't be again for many months. Cool Bean says, will there be a kegger? On the last day of the course, we're going to do a little like a meet and greet, where everybody will be able to join a Zoom call and see each other face to face. The rest of the course, you just get to see my face. But on the last day, if you want to see each other face to face, you can. We will generally have a drink while we hang out, as I will need to unwind after 2 weeks of stress. But if you get a keg, you're going to be on your own because, it's virtual. So the kegger is optional. Ken says the Q dipped below the 200 psychological level and the overnight low, now moving back into the overnight range. Well, both are doing that right now. Yeah, I'd say it's too soon to tell with the Q. But boy, does that motherfucker look pinned. Use this overnight point of control. This was the first night where the market felt pinned for both markets. Where did it spend the most time? Where did it bring in the most volume? Next day, it tried to go higher. What did it do? It came back again. Next night, it tried to go lower. What did it do? It came back again. What did it try to do today? Tried to go away, came back again. Someone's burning theta on the Q. All right, so now both markets have looked below the overnight low and pulled back up into the range. So it can get very simple from here on out. If the D period low, both markets, if the D period low breaks the C period low, it is trending lower and we're looking to start repairing weakness that we left behind below. If the D period comes back up and gets cessation, we're going sideways. It's that easy, guys. Does the D period high break the C period high, or does the D period low break the C period low? We also left behind one single print from the C period here at 52.43. That may be resistance. No way to know, but it could be. Here we go, testing it right now. And remember, they reversed right at the exact reference before. They may reverse at the exact reference once again. If not, that will increase the odds of chop in my mind. Truman says, can halfback of a period be support resistance? Yes, sir, it can. It's not as common. I would never put a limit order right at halfback of a 30-minute time frame, but it does sometimes work as support or resistance. Nap says, do you bring forward that those earlier single prints were not defended? Or is that old news now and not relevant? Those single prints were absolutely defended. That's right where we reversed. We reversed one tick above those single prints. So yeah, I carry that forward as telling me what I predicted, which is that this is a bot-driven market, like it has been the last few days, and that if reversals happen at an exact level, it doesn't mean what it normally would. I mean, look at how many weak levels we've left behind the last, 4 or 5 days. Just look at this. Just one after another, after another, after another, after another. So yeah, it just means these are bot-driven markets. And that is the only carrying forward I do. Now my focus is on two things. First, did we get the look below and fail of the overnight low, which we did? So now I'm thinking sideways. What changes my mind? If the D period low breaks the C period low. Then I think we're coming back for this week reference, and then either we reverse there, or we come back for this one. Either we reverse there, or we come back for this one, so on and so forth. So right now my feeling is sideways, but I'll change my mind real quick if that D breaks that C low. And I am not the least bit surprised it reversed at the B low exactly as it did in the C period at the A low. Because it's bots, my friends. It's worth noting when we look at support or resistance levels, we never think about them like they have to reverse to a tick at an exact level. So the C period getting one TPO into, above the base of those single prints, that's totally fine. I still count that as resistance at the single prints. You can't need things to work perfectly to a tick when it comes to support or resistance levels. Sometimes they need one little poke above or below to kind of squeeze those last few orders. Scalping Strategy says, Charles, as much as I want to take the course, but the market profile software you use is expensive per month. I don't know of any market profile software. Software will be comparable to what you are using. Otherwise, I would take the course. That is an interesting question. Well, first and foremost, this is not a market profile course. It is a trading course. Right? Like the original e-course I made, that was a market profile course on how to read market profile. This is all encompassing. It is much more about psychology and building out systems than it is specifically market profile. Of course, I teach market profile, but that's not the main focus of the course. It's really teaching you how to be a trader. How do you develop setups? How do you figure out what tools are right for you? How do you recognize changes in market behavior and adapt to them? How do you manage risk? All of those types of things. That being said, there are a lot of market profile options out there, some that are free or very cheap, depending on what broker you use. And in my opinion, they're all the same. So mine is kind of the fanciest of them, but you don't need anything fancy. All you really need to be able to use market profile in your trading is some sort of TPOs, right? Some sort of thing that lets you know how much time the market spends at certain levels. Sometimes they're letters like this. Sometimes they're like little boxes or little circles. It doesn't matter. It just, where's the market spend the most time? Do you see those big nodes of time? And then the other thing is the volume profile. Just being able to see what levels the market brings in the most volume. If you've got those two things, you've got enough to be able to use it. Now, do you have all the fancy little doodads? Can you see the single prints? Can you see, the buying tails and selling tails, and all of that stuff? Can you see the halfback? Can you see the halfback of each 30-minute TPO? Can you see the volume profile for the current 30 minutes or for the day and the cumulative? Those are all just bonuses. They make it a little bit easier, but they're not required. Okay, so I'm going to say the same thing about the overnight low right now that I was saying about the overnight high earlier this morning. If you recall, I was saying for both markets that overnight high was a deal or no deal level. Either they were going to bring in buyers and then they could keep it going, or they were going to fail and pull back. Same thing here with sellers. Both markets are in a position where if new sellers pile on at this overnight low, we'll continue lower. If not, we'll go sideways. Let's see what happens. Just got a poor low. That's bearish to see. Bear. Bear. As it increases the odds that the market will push away and then come back to repair it. Gio says, what about the 30-minute candles with volume profile? Yeah, that's pretty close. That's as close as you're going to get without market profile software. The thing that separates market profile from candlesticks, though, is that you can collapse everything on top. So let me just open up TradingView. So if you're looking at the candlesticks on the 30-minute on TradingView, you can technically see where they spent a lot of time. Looks like they spent a lot of time in here. Looks like they spent a lot of time in here. Looks like they spent a bit of time in here, a bit of time in here, right? Or actually, no, I'd say more like that right there. But it's hard to see exactly, like the exact level to a tick where they spent the most time. It just visually, it's hard to see. Whereas if you look at it on the market profile chart, it jumps out at you. Instantly, you know. Right? So where was resistance when the market came back up in the C period? Where was support in the A period? Right in this area where we spent a lot of time. Where was support in the B period? That is now acting as resistance in the D period, where we spent all this time, right? So time is very valuable. And so if you have a tool that can let you instantly see where those nodes are, where the market spends a lot of time, you can look for support there in the A period. You can look for resistance there in the C period. You can look for support in the B period and resistance in the D. It just makes it easier. That's all it does. For the human eyeball. All right, guys. Well, to me, this is officially bearish. The tempo is slowing, and so that is a sign the momentum is running out. But if they break this C period low now, they are going to squeeze any buyers that have been trying to buy the gap fill, and that will likely get us right back down to 52.33. Now, do I know if we'll keep going beyond that? No, I do not. It might be that we just repair that first week reference and then we run out of steam, and in the E period we come back up above the D and then we go sideways for the rest of the day. But I do think we want to test 33. Once we do, we are in a process of what we call monitoring for continuation lower. What does that mean? It just means we don't know the exact level where the market will run out of steam to the downside today. It could be there, it could be there, it could be there, it could be there. So we only take shorts. We don't try to buy the low of the day, right? We just go with the momentum, with the direction the market is going. And if we take profits at a weak reference and the market comes back up and it's getting resistance, we can get short again and take profits to the next week reference, and so on and so forth. Okay? We will know the momentum to the downside is over when one of the TPOs gets above the previous TPO's high. So if, let's say right now the D pokes lower and then we print the E period in 10 minutes and the E period comes up and gets above the D period high, well, then that's it. Whatever that low is, that's as far as it was going to go. But until that happens, as long as the market continues to make lower highs every 30 minutes, the market is likely heading to the next week reference. Okay? So this is bearish to me. Not necessarily that we need some massive move to the downside, but that we do at least need to get that first week reference repaired. And the end of that momentum will be cessation of the trend. Bearish says, I disagree. I think at the moment the ES is mildly bullish. It's above yesterday's settling price. Simple as that. Cool Bean says, value is up on the day, but price action isn't confirming it so far. Yeah, so you guys, I think, are misunderstanding what I'm saying. I'm not saying this thing is going to fall all day long. Quite the opposite. I think the higher probability is rotating inside the overnight range, right? But I don't think it's ready yet. I think it needs one more dip. It needs to, at the very least, repair the poor low. If it repairs the poor low, right, which is, 52.37, what will happen to all the buyers? They've been buying and buying and buying right here at the low over and over again. So you must understand there are stops waiting down there. If you take out those stops and the market starts to move lower, there is a potential that new sellers might start to get excited. They might start to see a pullback. If that is the case, we start repairing the next week references one after another. Now, all of this changes the second we print the E period, which happens in 4 minutes, if the E gets above the D. It's that simple. So I'm not saying that we're going to fall, 100 points to the downside. I'm just saying right now we need to test that low. Testing that low could cause a larger pullback, and that is what I'm predicting. I will change my opinion when we get cessation of the trend. And maybe we get cessation in 4 minutes, and maybe we get cessation in 4 hours. I don't know. We'll have to wait and see. Fighter Pilot, talking about different market profile software, says Sierra is less than $40 monthly. There are plenty of customized workbooks in Discord. A bit bulky at first, but after you can get it on cruise control with all the features. Yeah, so from the opinions that I've heard over the years, Sierra seems to be the second best choice, although everyone says it's a bit tricky tech-wise when you first start. But once you get it set up, you're good. And $40 a month isn't that much for software, especially if you can connect it to a data feed you already have. Okay, so now that we've printed the E period, we will find out. E period breaks D period high. We're going sideways inside the overnight range. E period breaks D period low. Down and down the market will go. Bot reversals. The bots reverse the D low at the C low. The bots reverse the D high at the B low. The bots reverse the E high at the B low. Bot reversal. Bot reversal. Fighter Pilot says, I would also recommend Charles's course, as I am a proud Daltonian pirate. Charles is great and understands the complexities of trader skill development. That's what it's all about. The goal of the workshop is to save you the years I had to spend figuring out the right way to do things. Because there is a right way and there definitely is a wrong way. Malcolm says, what will your schedule for us be during the workshop? If you're asking about members of the brigade, so I will only be for the next 2 weeks live streaming for the first hour, because at 10:30 I got to get ready for the workshop, which starts at 11. For people in the workshop starts at 11 and goes until 3. Cool Bean says the VWAP deviation band provides nice resistance when it works. Yeah, I don't trust these VWAPs right now. I'm just experimenting with it. So this is the anchored VWAP, where basically you can choose when to start the VWAP, like where you want it to start from. And I'm just experimenting with the idea of what if I started one at a change in the market. So obviously today that change in the market happened on the news dump, which broke the market lower. The market was doing something. It was a gap and go. It was above the overnight high. It was building volume. Everything was looking bullish. And then right when that news dump happened, everything changed. The momentum flipped. So I starting the VWAP right there, but this is just an experiment. So I'm not taking any trades based on this right now. But it will be interesting to see when we get to the end of the day, you know, how often was that second deviation support and how often did we return to that VWAP? Just experimenting. Jay says, we always have the Discord to share our thoughts and charts. Yeah, that's a good point. Whenever I'm teaching the workshop, the members of the brigade like to hang out in the Discord much more and share much more, and I love to see it. Ivan in the house, good morning to you. Oh no, I was trying to make a survey and now I've run out of time. I was going to ask, repair the poor low or reverse exactly at the low once again? And it's a repair of the poor low. Okay, so this is the scenario that we talked about earlier. Now we're going to start to liquidate buyers who have been buying up in here, right? Everybody who's been thinking the market was going to bounce, they're having to start changing their minds. So the question becomes purely, do we get new selling or not, right? Once we squeeze those buyers, do new sellers step in? Any resistance below the E period high is bearish for continuation lower. If the E period high gets above the D period high, the move to the downside is over. So there's your first bounce. Now we're looking for resistance. If we get that resistance, the next target to the downside is 52.33, and so on and so forth until this thing runs out of steam. With that, I believe I'm going to call it quits for the day. I appreciate everyone hanging out, especially a big thanks to Cool Beans for the $1 tip. I do appreciate it. And if you guys are on the fence about taking the workshop, give it some thought. You got 2 more days to sign up. It starts on Monday, and you don't want to miss it. Thank you very much, and we will see you all on Monday morning in the Bookmap stream. Have a great day, everyone. Like I said, as long as the market continues to one time frame to the downside, assume it can continue to go to the downside. But I personally don't think it's going to be a huge sell-off day. I think they're just looking to make a low and then go sideways. So if we don't get cessation now, they'll repair 33. If they don't get cessation then, they'll repair 31. If they don't get cessation then, 27. But I don't suspect it's going to last that much longer. Good luck, happy trading, and we'll see you Monday. Thank you very much, guys.